The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we settle down, Wednesday's market action mostly slightly lower across the grains and oil seeds. Another good day to the upside in cattle futures, said mixed action in the hog trade, and a little bit of positivity in the stock market too. Wondering the impact of some of these announced trade deal frameworks on the markets. We're going to talk about that much more here today on Market Talk. Joining us for a conversation, Mike Zuzolo with Global Commodity Analytics. And Mike, happy to have you back with us here this week. And a little bit lower in the grains and oil seeds on Wednesday. We got trade news, Japan, Indonesia, the Philippines, maybe more to come. But, all in all, it just didn't feel like a lot of this headline news moved the needle all that much on Wednesday.
No, I mean, for me, Jesse, picking up where we left off last week with the demand and the commodity demand low potential and the analysis that I presented with you last week, this was not a good day for the home team because we did get some trade deals. We've gotten several now in the last 72 hours. Yes, they're thin on details, but at least they're there and we are making headway. And one would have thought that the commodity demand mindset would start to improve, especially with this latest update overnight. I sent out a text blast to clients and subscribers at about 6:30 last night, Central Time, when I found out that the Japanese trade deal had gotten done. And what you can see in this graphic, I highlighted in green where we're going to settle out after August 1st with the countries that we've done a trade deal with. Everybody should be pretty happy with that because versus where the blue dot is, you're adding another roughly 10 to 15% or 5 to 10% between Japan, Philippines, Indonesia, and Vietnam when you get done with August 1 and the expiration comes and goes. But it could have been a lot higher. And then we still have question marks next to China, India, and South Korea. But bottom lining it out for me, and this is what I told this to clients and subscribers even before the Japanese news, is that we should have baked into the cake a pretty big yield number and a pretty nasty WASDE report for the corn especially. It's been the laggard all week this week. I think we're at a point now that I believe sincerely that we need at least a higher weekly close today, this week, if not take out the weekly closes from last week. And what we did instead on Wednesday was made new weekly lows, first in the corn, and then as we closed out the day in the soybeans.
Well, and real quick, before we really dive into the corn discussion, on that soy side, one would think that maybe some of these deals would be beneficial for soy more than anything. I think about a lot of those Southeast Asian countries and how much, they bring in soy products. I don't know. Your thoughts on that?
Yeah, I think that you said it before we went on air. Something we've talked about a lot is really when you think about the hogs and the soybeans, it's really about China and the fact that we haven't gotten China. And midday Wednesday, China's ag ministry formally came out and said, we've got overcapacity in our hog herd. We're going to reduce sows and we're going to cut back on soybean meal usage. And it sounds like a permanent feature. They're going to go seeking cheaper alternatives and pretty much take out the idea that they're going to continue to increase their soybean imports to crush into meal for their domestic livestock industry. The market, I think, was completely blown away and caught completely off guard by that. Because I say that, I was doing a Newswire update with Reuters, and midday I said, well, it looks like corn is the short side of spread between the cattle feeders, between the soybeans. Wheat's finding some hits on the European markets today after having the big day yesterday, but the corn just keeps being the short side of spreads because of yields. By the end of the day, they were calling me back saying, okay, now what do you say? And I said, well, we talked about what happened with China and the soy meal, and we did make a new 2025 intraday high in the the bean corn ratio, new crop hitting 2.46 Nov beans times D's corn. And so that happened, but then the Chinese news came out and that turned the market sharply lower to new weekly lows led by the meal. So I think that was pretty easy to see in the second half of the trading day.
No, that's a great point. I refreshed my screen there about midday and started to see the soy complex slip, and that's about that time that news came out. So that makes complete sense. Let's dive into this corn trade, though, a little bit more. You have some different charts for us to take a look at and talk about here. And you mentioned it. A lot of folks are talking about these massive corn yields that are being forecasted out there, and some issues, things like tassel wrap and some poor stands and areas that saw too much rain. And there's a lot of news swirling around the corn market right now. Let's dissect this a little bit. What stands out to you first as we look at a weekly corn chart?
Well, what stands out to me mostly is that we still have that gap at 394 sitting out there from last year, late last year, around the September time period. We got down to 395 last week. We did not fill that gap. And so it would not shock me to see us to go below last week's low of 395, fill that gap. But like I said a minute ago, I don't want any part of this market on the long side, and I can't go into a commodity demand low if these charts keep making new lows and that channel continues to be a part of our lives like it has been ever since the first part of April, the last part of March. And so I don't have a problem going down to 394, but I don't want to stay there more than a few hours. And I'd like to see a weekly higher close in the corn market. And if you had to ask me what were the major factors as to why we would need to stay going into a downward trending channel in the corn market, to me, it's all about the trade on the demand side. It's all about the yield on the supply side. And I was getting ready to go ahead and do my yield adjustments and give the clients and subscribers my fresh yield update ahead of the August crop report. But I thought I'd share some of the data with you and the viewers that get the free information. The nightly blog will have a lot more detailed information and a lot more additional maps that kind of round out the reason why I came up with the yield I did. But the first thing to look at here is this channel, this downtrending channel in corn. Why are we sitting here in a downtrending channel in corn when the Ukrainian grain prices are now at 45-day highs and their drought has gotten worse than it did last week with some rains coming on probably later this week?
Let's break this down by contract a little bit as well and talk. Let's look at the September-March corn spread. I think this is an interesting one to take a look at before we talk more about December corn. Adding on to that channel you're watching, what are you seeing with some of the spread action right now?
You had brought up the issue with the pollination and the nick. I too have been hearing a lot more about that this week. Even the news wires are talking about it a little bit more this week than they were last week. And I like this spread, the September, excuse my poor spelling of the word September, the September versus the March corn. This is very similar to what we looked at a few months ago, the July versus the Dece corn. You know, no matter how sophisticated and how many investment funds come into this market, one of the more reliable tools in this trade, and grains at least, is still the carry or the inversion. And we see ever since the early part of 2025, essentially as we got to March, the close to inversion where we were only 7 cents discount in September to the March, we're now sitting at 36 plus cents discount September to the March. We have built the carry up to tell the traders telling, and the commercials telling the farmers, we don't want your corn anymore. We want you to store it. We're going to pay you 36 cents all the way out into September to do that. This is the spread I think that we want to watch very closely, because I think it'll be some clarity in this spread if that pollination issue does indeed come in and impact USDA's yield numbers, or we start to hear more about it in some key growing areas. And that would mean to me that instead of being 36 under the March futures, September would start to rally against the March, with the idea that we have still a razor thin old crop corn supply that is not coming on with the big bumper new crop supply. This spread says we've got a bumper new crop supply. Forget about the old crop numbers.
Mike Zuzolo with Global Commodity Analytics is joining us here today on Market Talk. Let's switch over and talk about the December corn seasonal chart and, kind of continuing what we're looking at here. September corn, for instance, just talking about that, it did close below $4 on the board on Wednesday. So you think about that September-March spread action, but what about D's 25 corn kind of flirting with that 415, 420 mark? And it looks to me as if it's really kind of trending to where we were at this time last year.
Yeah, the last 30 days or so, Jesse, that's exactly right. We've really teamed up nicely with where we were back in 2024. And it feels like 2024 again with these big yield talks and the idea that we're not going to have the demand to underpin us. And so what I like about this 5-year seasonal, because we're just looking at the last 5 years and then this current year, December corn, what we really want to see after the August report is a shift in the market mindset to more like a 2022 price action. And notice in 2022, we actually made a low pretty much right here in this time period of the second week of July. And we really went higher all the way into harvest until we knew the crop was there. And then we kind of rolled over after mid-October. What we don't want to see is a continuation of 2024 and a continuation of moving down into that 375, 380 price level in December futures. But this goes back to the two charts I just showed you and goes back to the yield potential and the trade talks. Is that if the spread can't come alive and the downward channel on the weekly chart continues to pressure the market, then how can we get out of 2024? And that's why I'm really putting time is of the essence and putting a marker down here about this commodity demand low, this grain demand low that I think we have, but the trade clearly is not seeing it yet.
What are you hearing from clients, from producers in terms of some of these potential issues that are out there? And we're taking a look at some of the latest NDVI data here on the video feed. I mean, it seems to be all over the board, Mike. You see pictures on social media, you hear chatter, people are talking about it more. I think it's tough to understand what the real full story is out there, at least at this time frame.
Yeah, and I think that's especially the case, Jesse, because of the top 5 states, 3 of those states made record yields in corn last year: South Dakota, Iowa, and Illinois. And so, yes, and this is one of about 4 or 5 maps and graphics that I use when determining my final yield for the whole country. And that's the 182.2 that I have with the commentary in the top right-hand side of this graphic. But when you have that kind of a situation on your hands of record yields in 3 of the top 5 acreage states last year, how much more can we ask for the crop, especially given some of the anecdotal and talking point information that we're starting to hear about the heat and pollination. And that even goes into Nebraska for sure, because I've heard from Nebraska clients. In the last couple days, I've talked to Nebraska clients, I've talked to Kansas clients, talked to Ohio clients, Indiana clients, Illinois clients. I haven't talked to too many Iowa clients yet. I have heard from Iowa people, though, that have driven through Iowa and said it's just remarkably beautiful and you couldn't ask for a better crop. But there are trouble spots along the Ohio-Indiana border again, like last year. What this map does not pick up is a significant issue along the Illinois-Indiana border, western Indiana, eastern Illinois, just south of Chicago. This NDVI mask, a crop mask vegetative index, has to be understood that this covers between 2001 and 2023. In other words, the mean of all those years it's looking at. And I like that because it gives me a bigger picture. And so what I did was I took the top 7 states, or top 6 states, I should say. Kansas is number 6. So those 6 states end up being about 56 million acres out of the 95.2, or just under 60% of the total. And so when we look at this map and we exclude Ohio, Michigan, Wisconsin, North Dakota, and even Indiana in this case, we're looking at in Missouri, we're looking at a situation where that 181 yield that USDA has for us right now how much more can we ask, given that the oranges and the reds are suggesting that we've got 75 to 90% of an average seasonal greenness over the course of those 22 years. And so people promoting a 185, 188 yield out there that I've heard about this week and last, I just can't get there. And I can go above USDA's number right now. I can go a little bit higher because of some of the other maps and because of the weather we're looking at here in the next 10 days. So I could take the 182.2 higher in another 2 weeks. But it's very hard for me to reach up to 185 plus, given everything I've looked at.
Great thoughts. It's going to be an interesting conversation, no doubt, over the next several weeks ahead as we get to that finish line for harvest season. Mike, let's talk livestock. We got a cattle on feed report coming up Friday after the close. We also had the return of the July cattle inventory report. Let's talk about some of this. Good day in cattle on Wednesday. Futures, both fats and feeders. What are your thoughts heading into the end of the week and these reports coming up from USDA?
With the new trade deal, I do think the cattle really benefited from that and the Japanese trade deal specifically. But I didn't see the negative reaction in the hogs go all the way into the close, given what we heard about China. And I would have thought that if China is looking at culling their breeding herd, they're going to be putting a lot more domestic meat on the marketplace and putting that in the slaughter mix very soon. And that would likely cut our exports in China for the next couple months. And so I think there's some work to be done. Unless we get a trade deal with China, I think there's a lot of hedging work to be done once the cattle make a high in the hog market. And we've been able to get that BLT seasonal in the bellies to help the pork cutout. So I'm going to set aside the hogs at this point and say, now can the cattle go higher? And what I was surprised about on the Reuters estimates was that the expectations by the market is only about a 96% marketing number of 1.72 million head for the month of June. And Jesse, by doing that and bringing in only 98% placements, we're still going to have an on-feed number as of July 1 that the trade thinks of 11.2 million head. That's really very close to where we were last year at this time. And you notice that in June and in May, we'd started to widen the gap as far as a lot lower number versus 2024. If we're up to 11.2 in July, that really narrows the gap, and it really opens the door that maybe USDA is correct about having bigger production numbers in 2026, because they really feel like we have left a lot of calves in the pasture and not put them on feed, but they're going to come the second half of this year.
Well, and thinking about overall meat production and prices, we've been tracking some of these changes here as of late from USDA and more. And, tying this into the whole conversation, it's another piece of this puzzle in terms of whether or not cattle prices, beef prices could continue to move higher, Mike.
Yeah, and this table is exceptionally important for us for a couple big reasons. Number one, kind of dovetailing with what we just talked about. If you look at beef production for 2025, USD is at 26.19 billion pounds. They took that up 540 million pounds this month in their WASDE report, again, because they think there's going to be more cattle coming in on feed, placed, that are on pastures right now. I would guess you're going to see some dairy beef come in because of the seasonality of this market as well. I'm doing more digging on that. So that's point number one. Do these numbers of 25.82 billion pounds for 2026 match up with what USDA gives us on the cattle inventory report or not? And so that's point number one. Point number two is look at the total meat production for 25 versus 26. 107.37 for 25, 108.18 for 26. We're going to see an increase in both pork and broilers and even turkeys to help compensate for substitute red meats. We really got to start thinking about this as we get into the third and especially as we get into the fourth quarter because of the prices we're seeing right now. And that's, again, very crucial to what we see on Friday's numbers to see if we're going to have those kind of numbers given the monthly cattle on feed report and also given the cold storage numbers.
How about the cash cattle trade? Any notes there as you're watching that this week?
Yeah, this is why I'm watching very closely and thinking that these cattle reports and these meat reports Friday are getting us back to where we have to feed the bull again. It's because the futures market has been going up to meet the negotiated cash price. And the negotiated cash price is all over the place right now, Jesse. It's 233 on this board with the USDA posts. It's as high as 240 in Nebraska and the Western Corn Belt. So I'm going to say it's closer to 235 in the real world. Packers are bidding up right now. That's great, but we're also getting towards the end of summer. So I've heard from more cattlemen than I have in the last month or so. I think they're starting to sense that we're getting toppy too.
Mike, always a great conversation. If folks want to reach out to you and talk more, take a look at analysis, all those types of things, what's the best way?
Best way is globalcomresearch.com to get a 2-week free trial on the audio, the video. As I said, we put a lot of weather in the analysis, a lot of macro. Try out the analysis and see if it doesn't help you.
GlobalCom with 2 M's, research.com. Mike Zuzolo, Global Commodity Analytics. Good to talk with you again this week. Have a great one. We'll talk to you next week.
Thanks, Jesse. You too.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.